What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we continue to see the bears pushing down from the bear market resistance trendline, but we are now getting into some very critical support, which means there is a chance we could start to bounce from support levels. So first up, let's take a look at the SP500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So today in SPY we were down 0.73%, and we did hit that very critical support zone around SPY 390. And we did close just below the 50 EMA and just above a rising 20 daily moving average. So from here you can see we are clearly in a daily consolidation between our support trendline and our bear market resistance trendline, which means the price action is going to continue to go sideways until we get a breakout. At this point I would get a lot more bearish if we lose this support trendline down here right around SPY 385, and a lot more bullish if we get the bull breakout above SPY 399. Anything in between that is likely going to continue to be a choppy trading range as we go sideways and continue to consolidate before the breakout. Now, one thing you do need to pay attention to is that we did gap down, so there is a gap to fill to the upside at 391.28, so there is a good chance we do go up there and fully close that gap, because we did not fully close that gap today. If at any point we start losing the support trend line, we're coming all the way back down to the very critical support, which is right around 378. And then below that support level, we are very likely continuing lower into the bear market. Now, do not rule the bulls out while we are above the support trend line and while we are above the rising 20 daily moving average. So I definitely don't suggest getting overly bearish as we come into this very critical support zone. Wait for the price action to break through support, and then you can instantly become more bearish. So just like I said, don't be bullish up here at resistance. I suggest you definitely don't get bearish down here at support and just continue to trade the range, which means you're going long at support and you're shorting at resistance until we get a clear breakout from this consolidation. Also pay attention, the volume did drop off a little bit today, so we're just not seeing that high volume panic selling, even though we did go a little bit lower today. On the Nasdaq 100 triple Qs, we were down 0.98% today, and we did gap down, so we do have a gap to fill to the upside just below 278, and we still have the gap to fill to the downside just below 273. So in the triple Qs, we're also stuck within a trading range until we get a breakout, because we're likely going to chop between 268 and about 285 until we get a bull breakout above the bear market resistance or a bear breakdown below critical support. You can see the rising 20 daily moving average in the triple Qs is down here just around 270. So as long as we are above the rising 20 daily moving average, you don't want to get overly bearish, because there is still the chance we bounce from there and try to go test that bear market resistance trend line. In the Dow Jones, we were down 0.7% today, and the Dow Jones also gapped down, and we did see the price action closing below the 50 EMA and the 20 daily moving average, and we do have a gap to fill to the upside at 332.7. We have some critical resistance now right around 333 to 334, and the critical support down here at 327, and if we break below 327, that is going to look extremely bearish, which means we're likely coming down to about 319. If we fill the gap to the upside, it could act as instant resistance, and we need to get back over that 20 daily moving average at 334, and then we can start looking a little more bullish, which means we could start running back up into the 340s. On the Russell 2000 IWM ETF, we were down 0.96% today as we continue to see that rejection from that strong resistance at 188. We have strong support around 182 and the gap fill just below 181, and we also do have a gap to fill to the upside now at 183.7. You can stay bullish as long as we're above this support right here at 181, but if we break down below that support, we're likely coming all the way back down to 178. If we close the gap and blast through 184, look for a retest of resistance at 188. On the ARKK ETF, we were down 3.23% today, and we did gap down and test critical resistance down here at 34.6, and so far that level is holding up as support. To the upside, we have a gap to fill just below 36 and resistance at 37 and 38. And if we break the support at 34.6, we're likely coming back down to 32.5 and the gap fill at 31.68. On the VIX, we were up 0.98% today as the VIX closed back over 20 for the second day in a row. But if you look at the daily candle, you can see the VIX was trying to get a breakout back over 21 and instantly started getting crushed back down. Tomorrow is Friday, which means we could see the VIX getting crushed back down below 20. And I do think that could be an indication that we're going back on the bull if the VIX crushes down below 20. But while the VIX is elevated above 20, stay cautious for a volatile market. On Bitcoin, we're currently up 1.86%, and Bitcoin is back over a rising 5-day EMA as we are building a bull trend, but we do have this resistance at 21,300. On a break above resistance, look for the next leg higher at 22,409, And if we get rejected from resistance, look for support around 20,600 and the 200 daily moving average at 19,500. On Amazon stock, we were down 1.86%. After that bearish candle yesterday, we did see follow through to the downside and we closed right on top of the 50 EMA of support at 93.5. If we break this support, look for the gap fill at 90 and the critical upside resistance is going to be 96 and the daily high at 98. On Microsoft stock, we were down 1.65% as price action is back down below all of the moving averages after that bear market rejection from the resistance at 242, which means we could be coming back down to fill the gap around 225. So you're looking for critical resistance at 236 and 242 with the downside support at the gap fill at 225 and 222. On Nvidia, we were down 3.52% today as Nvidia continued that rejection from the overextended conditions, and we do have a gap to fill to the upside now just below 173 with critical support at 166. If we break through support, we could come back down to 156, and if we break that, we do have a gap to fill at 150. To the upside, look for that gap fill of resistance at 173 and the previous daily high at 177, and above that, we still have resistance at 179. On Tesla stock, we were down 1.25% today as Tesla is back over the 5 EMA and still holding above that critical breakout at 123, which is still going to be short squeeze territory. If you look at these moving averages, you can see they're starting to cross over to favor the buyers. So as long as we're above 123, you need to stay on this bull because there are a lot of short sellers in this stock that have still yet to exit. Above 123, we're likely going to 138 and then 155. And if we break down below 123, then you need to be more cautious for the gap fill below at 114. On Apple stock, we were flat on the day, closing just above that critical support at 135, which means you can continue to stay bullish as long as we're above this support. If we break below 135, we have strong support at 130 to 131, and then we're getting a lot more bearish if we lose that support. The bull breakout is above the resistance trend line at 138, and above that we could run to 141 and then 146. On the financials, we were down 1.16% today, and we are holding right above this support, and we do now have a gap to fill just above 35. The industrials were down 2.06% today, closing down below the 50 EMA, and they do have a gap to fill up here right around 99.6. The healthcare sector was up 0.25% today, but still below the critical support at 134, which means we're likely heading down to the 200 daily moving average at 131. The energy sector was up 1.24% today with the price action back above all of the moving averages, and we do have the full bull trend, so we are very likely going to see energy trending higher towards 92. So jumping back over to the S&P 500, we are very likely going to see more consolidation as we ping pong between support and resistance until we get the bear breakdown or the bull breakout. Know the critical support and resistance levels and then trade the range until we get the confirmation of a breakout, and be prepared for either scenario and let the price action do all the talking. I will definitely caution you against getting overly bearish as we come into support because there is a lot of people betting against this market, and typically the market does the opposite because the market typically will hurt the majority. So don't get overly bearish until we break through support and it's official that we're heading lower. Let the price action do all of the talking from here. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank Trade Alerts or learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, come join us over at the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.